Let me ask you something. Have you ever taken a trade that looked perfect on the 5-minute chart, only to get stopped out immediately? It is not your strategy, it is not your risk management, it's because your time frames are fighting each other, and smart money loves when traders don't see that. Today I'm going to show you exactly the way I align my time frames to trade with precision, using a simple mechanical process that makes me 6 figures every year. And at the end of this video, I'm going to walk you through a real trade I took live in front of my members, step by step, using this same method, all the way from bias down to entry. So if you are struggling with consistency, this video might change everything. So in this video, we are going to cover what is time frame alignment and why it matters. Time frame alignment means making sure your higher time frame, mid time frame, and lower time frames are telling the same story. In smart money concepts, it's the difference between trading with the narrative or fighting the narrative. Most traders lose because they're going along on a 5-minute chart while the daily and hourly are clearly bearish. Without alignment, you are entering trades in the wrong context, chasing liquidity instead of following liquidity. We're going to cover the correct time frame stack. I use a 3-step stack. The higher time frame for directional bias, the middle time frame for refinement, and then the lower time frame for entry. For example, the daily gives me the macro structure, the 1 hour helps me refine points of interest or zones, and the 5-minute is where I wait for internal structure breaks and my entry models. Each time frame has a role. Mixing them up leads to confusion and inconsistent results. How to align market structure across the different time frames. So we're going to start by marking structure on your higher time frame. Are we bullish or are we bearish? Are we in premium or discount? Then go to your mid and lower time frames and look for structure that agrees with your higher time frame. If the daily is bearish and the 1 hour gives a bearish change in a state of delivery from a premium, that is alignment. But if the lower time frame is forming a bullish change in state of delivery while the higher time frame is bearish, you're better off waiting. Structure must flow in one direction. And finally, I'm going to cover a live trade breakdown of how I use this trading live in front of hundreds of students inside my premium mentorship program. So the correct time frame alignment pairing is from the monthly to the daily to 1 hour and 5 minute, meaning you can go from the daily 1 hour 5 minute, you can trade the monthly daily 1 hour, you can trade the 1 hour and 5 minute. And then we have the weekly, the 4 hour, the 15 minute, and the 1 minute time frames. That means you can trade the weekly 4 hour 15 minute, you can trade the 4 hour 15 1 minute, and you can trade the 15 minute as a higher time frame, with the 1 minute being your execution time frame. This means you cannot use the daily with the 4 hour and 5 minute, and you cannot use the 1 hour with the 15 minute and 5 minute. It is very important to use the correct time frame alignment. In this example, we have a bullish change in the state of delivery. Let's say that is on the daily time frame, and we see a nice order block being formed by the gray shaded box. We then see price action trading back into that change in the state of delivery or that bullish order block, and on the 5-minute time frame, that is going to look like a complete trend reversal. And then you might be considering bearish trades on the 5-minute, but while the daily and the 1 hour is still bullish, and then we see price action respect that area and trade away from it, but your 5-minute looked like a bearish market reversal. But all it was a retracement into a discount array for the trend to continue. That is why time frame alignment is essential to professional trading. Let's be real for a second. Trading isn't just a hobby. It is a chance to break free from the 9-to-5 grind, to live life on your terms. But here's the truth. Most traders fail because they try to do it alone, drowning in confusing strategies and endless noise. What if I told you you can trade with a pro by your side, someone who's been there for over 10 years, who knows exactly how to read the market and who shows you every single step live right in front of you in real time? That is what you get with our mentorship program. A full system, real-time guidance, daily setups, live trading sessions, and the accountability you need to finally see consistent profit. Right now, the doors are open, and until June 30th, you can get 15% off lifetime access with code LIFE15, all capital letters. After that, the prices go up, and this discount disappears for good. So don't wait. This is your moment to stop dreaming and start trading like a professional. And you don't have to take my word for it. You can go ahead and you can look at all the different testimonials that we're getting from the members inside of our community. We are changing lives, and we are doing it different because we actually care about our members. So this is your moment to stop dreaming and start trading like the way you want to. Remember to use code LIFE15, all capital letters, and take control of your future today. So what do we have here? Here we have the 1 hour time frame, and over here we have the 5-minute time frame. So in the previous example, we saw that we had a bullish change in the state of delivery, giving us a nice bullish order block. Then on the 1 hour time frame, if we get that retracement into that order block, on the 5-minute, it might look like a complete trend reversal. So on the 5-minute, this gray shaded box will be this 1 hour order block. And we're going to see something like this. We're going to see a bearish market structure shift and a trade back into that level. But all this is, it is not a trend reversal. It is just this pullback on the higher time frame. So then what do we need to get alignment? The way that I use alignment is I want to see a change in the state of delivery. That confirms that we have gone from a bearish program up to a bullish program. So now we can see that the 5-minute time frame is in alignment with my 1 hour time frame. My 1 hour time frame has traded into a daily point of interest in the form of sweeping internal liquidity or external liquidity. And then we've gotten our 1 hour bullish change in the state of delivery. So what does that mean? That means that my 1 hour time frame has been aligned bullish. So now I need my 5-minute time frame to agree with my 1 hour time frame. So I'm not going to look for sells here. I'm not going to look for this change in the state of delivery and a potential fair value gap entry. I'm not going to do that. What I'm going to do is I'm going to wait for the 1 hour time frame to trade into that 1 hour order block to look for a potential propulsion block formation. And then on the 5-minute time frame, as soon as we trade into that order block, I'm going to wait for a new order block to get formed. After that order block forms, I've got two options. I can either take a retest of that order block, or I can wait for a propulsion block to form and then take an entry on that propulsion block. That means my stop loss will be tighter and I will be able to get a higher risk to reward. This is proof that I actually sent this trade to the live members, and I have been updating them as soon as the trade has been managed and hit take profit. This is a trade that I've shared live in a trading session in front of hundreds of traders, and this will be the trade that I'm breaking down today in today's video. So looking at this USD CAD trade that I've shared live in front of the members, and remember guys, I trade live right in front of you. I don't hide anything from you, and I'll show you exactly how a professional trader with over a decade of experience approaches price action. So we see here that the market is clearly in a bearish order flow state. So we are looking for bullish PD arrays to get taken out. Here at the moment, we do have a swing high that we can take out, and we do have all of these fair value gaps that the market hasn't swept yet. So using that as a draw on liquidity, we can see that the market trades higher into that area. But now what do we need to form a protected high? We need the market to go ahead and close below these series of up close candles to form what I like to call a continuation block. So waiting for the market to go ahead and close below those series of up close candles to then form that continuation block, that is what we get over here. So then going ahead and drawing out this continuation block, looking at that, waiting for the market to trade back into it, what do we need now? Now the market trades into a fair value gap. I want to see a closure below these series of up close candles again. As soon as we close below that, we form a propulsion block. That is exactly what I would like to see. Waiting for the market to go ahead and trade back into that and retest it, waiting for that to happen. Let's see, we do get that, dragging this propulsion block across. Looking here, we can see if we zoom in, we have body closures respecting that propulsion block. We are not closing in that propulsion block. So this is where I started looking for a trade. We are also respecting this fair value gap. And what I want to see is this wick rejection gave me a little bit of a mixed signal. So waiting one extra candle, we can clearly see that we respect that propulsion block again. So if I go ahead and I draw out that order block, we trade back into that order block and we have that body closure respecting that order block again. This is how I got my daily bias using the daily time frame. Then after that happens, I drop to the 1 hour time frame, and looking at that 1 hour time frame, what do I need here? Here we can see that we do have that short-term trend reversal going to the upside, where a lot of traders might think we are in a bullish program. So how do we confirm a bearish program? How do we get alignment? Well, we have this single up close candle that made that high. I want the price action to close below that up close candle. We can also see that we come out of a fair value gap. So we trade into a PD array. We close below the up close candle, giving me my valid change in the state of delivery. What do I need now? Now I need the market to trade back into that level, taking out a point of interest. So I need a new inducement. What does that mean? Here we are busy trading away, but if I go and I mark out all the points of interest we have this swing high and we have this swing high that the market hasn't traded back into yet. Waiting for the market to trade back into that, what do we see here? Here we can see we sweep out a point of interest. So now we have inducement. After the market has induced and trapped traders above this high, that is where I can drop to the 5-minute time frame. And again, this is where I can look for my time frame alignment. So what do I need on the 5-minute time frame? Well, I'm going to need a new sweep of a high, and then I'm going to need a change in the state of delivery, and that is where I can take my trade. So just waiting for that to happen. Let's see, do we sweep out the high? We do sweep out the high. Let's see. Now what happens? Now we have 3 up close candles to that high. Do we close below it? Dragging that along, let's see. The market does in fact close below the series of up close candles. Letting this market run, we see that we do have a little fair value gap, and that is what you can use as an entry. So now you have a bearish order block and you have a fair value gap that we can use as an entry, looking to cover this protected high and targeting these lows. That is the trade that I've shared with the live members. So waiting for the market to trade back into that gap, we see we do trade into the gap. We experience a little bit of drawdown, but then ultimately this market runs down and hits my take profit for a very nice almost 3R trade. So how can we extend these targets? Looking back at the 1 hour time frame, having a look, if we go ahead and we can measure out our standard deviation projections, we see that my -2 standard deviation projection line up with this sell side liquidity. So that is where we can take our second target. Then waiting for the 5-minute time frame to align, and we can see that we melt and price action drops all the way down, and this ended up being a very, very good trade. So if you want to trade alongside with me, a professional trader doing this for over a decade, and I actually make a living from the markets, and I'm ready to teach you exactly step by step how I do it, check out the link in my description below. You have a couple days left before that promotion ends, and it will be the last promotion ever. Guys, thank you for watching. I hope you enjoyed today's video. If you did, leave a like, leave a comment, and let me know what you want to see on the channel next.